Good morning, and welcome to the Energy Prospectus Group webinar, hosted by Volt Lithium. This event is being recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here is Dan Steffens, who will introduce today's speaker.
All right, thanks everybody. It looks like we got good attendance today. I think we had about 80 or so register for this, so that's great. But welcome to today's webinar. That's being hosted by Volt Lithium. It trades on the TSX Venture Exchange with the symbol VLT and on the US OTCQB with the symbol VLTLF. Joining me today is Alex Wiley, the company's president and CEO. Volt Lithium is headquartered in Calgary, Canada, is focused on creating value for shareholders by becoming North America's first commercial producer of lithium carbonate and lithium hydroxide monohydrates from oil field brine. Volt has a clear path to lithium production. In addition to a fully operational field simulation center in Calgary, Volt will be ramping up field operations in the Delaware Basin in West Texas during the third quarter. For those of you that aren't familiar, the Delaware Basin is a sub-basin of the Permian Basin, which is probably the most important oil field in North America. Volt has a clear growth stage advantage over its peers. It's reinforced by targeting of reservoirs with existing infrastructure and lithium-rich brine production, speeding up the commercialization process. On April 29th, Volt closed a $1.5 million, that's US million dollars, funding for the construction of a field unit in the Delaware Basin during the third quarter that is expected to produce lithium using Volt's proprietary direct lithium extraction, that's DLE technology. Today's speaker is Alex Wiley, Volt Lithium's president and CEO. Alex has a proven track record of funding and building successful high-growth resource-based businesses, bringing significant experience and relationships to the sector. If during the webinar, if you have any questions, please type them into the chat box and we will answer them after the presentation. With that, I will now turn it over to Alex for an update on Volt Lithium's accomplishments in 2023 and their business strategy for 2024. Go ahead, Alex.
Okay, thank you, Dan, and thank you for the introduction. I'll now do a walkthrough of our presentation, and again, any questions, happy to answer any questions that might come up as part of this. Okay. Volt Lithium. Volt Lithium, we are a lithium development and technology company. What that means is for Volt Lithium, we've actually got two proprietary parts to our system. Our media itself, which creates the chemical reaction to do the lithium extraction in our direct lithium extraction process, and our overall process. And so we've developed my apologies. We've developed a proprietary system to sorry, my apologies. Dan, sorry, can you guys hear me okay?
Yeah, we're getting some feedback, I think.
Okay.
But we can hear you.
Okay, can you hear? Okay, is that any better now?
That sounds good now.
Okay.
Oh, no, sorry, you're back to an echo.
Okay, is that better now?
Yes.
Okay. Okay, my apologies. So Volt Lithium, we've developed two components to our proprietary technology. Our media that does our lithium extraction itself, and our system that does our overall process for extracting lithium and creating lithium carbonate, as shown on the picture here. For Volt Lithium, we've decided to commence our field operations in the Delaware Basin in West Texas, USA. And the reason for that is just the amount of water that the Delaware Basin and the Permian Basin produce every day, which I'll be going through later in the production. Since over the last year, we've been really focused on not only improving our lithium extraction process, but also reducing costs. In our opinion, It's not only critical to be able to extract lithium from oil field brines, but we have to be a low-cost provider. And so that's what we've been very focused on over the past year. How we're a little bit different than other groups. I think one of the things that's most unique about us is we feel the most appropriate way to get into production, to start commencing operations on our side, is to partner with operators in the oil fields. And so what we see happening today is there's significant water being produced in association with oil and gas production. And in various basins across North America, that water has lithium in it. And so our focus has been on improving operations, getting better at our ability to extract lithium, as opposed to focusing on exploration and also the CapEx associated with it. So we see ourselves as in the lithium extraction business as opposed to the lithium exploration business. A lot of people have seen this in terms of forecasts for growth and whatnot in the world. I guess my comment on this slide in terms of where we're heading today and directionally where things are at, what we've seen in particular in the US is the Biden administration has recently put on 100% tariffs for any imports of EVs from China. So what we're seeing is an opportunity in terms of finding a domestic supply, a US supply of lithium to be able to support the industry as we move forward. The pricing that you see in China today is about $14,000 a ton for lithium. That's the spot price. However, when I look at it from a North American perspective, car companies, OEMs, they want certainty of supply from a domestic component. We believe that the oil and gas industry and Volt can be a big provider of that security of supply from the domestic perspective. Need for North American production. Again, it goes without saying there's lithium around the world today. When you look at the price of lithium, when you look at the supply of lithium, 80% of the lithium in the world is processed and refined in China today. With the Biden tariffs that are going on, that's going to severely restrict access to North America. We want to be a solution from a North American perspective. So what do we do? What is lithium? What is Volt, and what's our process? We really have a three-step in general process that we do. And in step one, what we do is we treat the brine. So what we try and do in step one is remove contaminants. And when I consider contaminants, that's things like organics or anything that can cause interference with the process. We've developed our technology and our lithium extraction process where we're not concerned about things like magnesium or calcium causing interference. We've developed our chemical reaction. We've kept our media such that we don't have problems with interference with those types of metals. So when I look at contaminants, it's purely organics. In stage two, in terms of our lithium extraction process itself, we've been successfully extracting lithium from oil field brines since 2022. Over the past year, our real focus has been in 2023, we were running pilot operations to see if our process worked. We built a demonstration plant in Calgary, which is now our field simulation center. And the purpose of doing that field simulation center was to improve our process, to improve our operations. We're constantly processing water, processing brines from across North America, and we're constantly improving our system. The effect of that improvements in our system has dropped our operating costs. And then in stage three, what we do is we concentrate and crystallize the lithium to create either a lithium carbonate or a lithium hydroxide. And we're capable of doing both at this point in time. So people ask, well, why are you focused on the US? Why are you focused on the Permian Basin? What does this all mean? And so what we've done is we've really looked at multiple basins across the US. Now that's significant. So when I look at water production in the oil and gas industry, my analogy is, especially when you look at the Permian Basin, for every barrel of oil that's produced, there's an additional 4.5 barrels a day of water that's produced. That water has to be separated from the oil and Typically what happens is it's flowed to a saltwater disposal well and safely injected back into the reservoir. What we see as the opportunity is taking that water before it gets injected and extracting the lithium from it. Now, the basin that we're focused on first, where we're starting operations, is the Permian, and the subset is the Delaware Basin. So when I look at that Permian Basin, they're producing 19.5 million barrels of water a day. That's significant. Of that 350,000 tons of lithium that is the potential from the oil and gas industry in the US, approximately 300,000 come from the Permian Basin. So we're going after a big prize. Again, the key is to be the low-cost operator. First of all, you have to be able to do it. And the second is to be a low-cost operator and being able to produce. Now, people say, okay, well, what does this mean? What does this look like from an economics perspective? Now, what we're doing is this, I'm providing an analogy of what we've done up in Rainbow Lake in Canada because the water is very similar and the process is very similar. And so using this analogy for what we're doing in the from Rainbow to the Permian, the economics are very similar. When I take a look at the low grade, okay, so 34 parts per million, a system as we scale up moving into next year, we're looking at designing 100,000 barrel a day systems that will be able to cash flow anywhere from 18 million on the low end to the mid range of 26 million. The capital investment for that is $20 million. So when people, what we're trying to articulate is that to get into lithium production, to get into the industry, it doesn't have to take a lot of money if you're partnering with groups that have the infrastructure in place. Again, from the other slide, there's a lot of water being produced in the US today. I think the most important thing is to take advantage of it, extract the lithium, and start developing a business. We can do that in short order. One of the key things for us when we look to going into operations, and I'll just drop over to the next slide, is that from an environmental perspective, we don't have issues. We're not doing anything new. From the perspective, we're not drilling new wells. We're not putting up a mine in place. We're taking water from infrastructure that's already being produced, disposed of today. And so we're just fitting ourselves into the oil and gas ecosystem to be able to do our lithium extraction. So then when we look particularly at the Delaware Basin, what's the prize? Well, today there's 11 million barrels of water being produced in that Delaware Basin. And looking from a range, you can get from anywhere from a supply of 10,000 tons per annum up to 100,000, depending on who you partner with and the ultimate size of the prize. This is critical and this is key. When I look at the opportunity, I not only look at, okay, it's great to say you can produce lithium, but you have to be able to sell it. And from the perspective of being able to sell it, you have to have, in my opinion, a large enough supply or production capacity to make it worthwhile for the OEMs, the car companies, to get into an offtake agreement for you. So we view this as very important. So we can, with what we're doing with our partner, we can look at it and we can make commitments that you could otherwise not make because we're not taking that exploration risk. The OEMs like that. That's really important. What we see in terms of being able to be a supplier of lithium in North America, because the industry produces water today, because it's been producing for a long time, we can commit longer term than others because we know that there's a security of supply. As an example, in the Delaware Basin, the drilling inventory from an oil and gas perspective is 55 years. There's going to be water here for a long time, and that's a key for us in being able to commit to other groups. Our operational process. What we've done with a number of groups is we've been taking groups in terms of where we were last year, doing analysis, demonstration plan, and field simulation standard testing. We've completed all that with our partner. Now we're at the process where we're going to go into operations. Our field simulation center has been absolutely critical to go into operations as we go into Q3. We've built the field unit. We're getting ready to ship in short order. And we've leveraged everything that we've done in terms of testing our system to be able to go into the field as we move into Q3. Our demonstration plant, which has created our simulates field operating capabilities and our ability to process. And what we've shown in the past from our previous press releases, We're consistently getting high extraction rates. We're consistently trying to simulate field conditions. Our system works, and we're now in the process of going into the next level. Again, a little bit about our strategic investment. I've been asked the question, okay, about your partner, have you named your partner yet? We have not. We are going to be going into the field and showing success in the field. People have asked, okay, well, you've got a $1.5 million investment. Is that enough? The discussions we had with our partner was they basically said, well, how much do you need to get in the field to get into production? We said $1.5 million is the right number. I'm very sensitive to diluting shareholders, so I want to make sure that we've got enough money to get in the field, we've got the cash to be able to move forward, and we can demonstrate success in the field, and that's what we're doing at this point in time. As I mentioned, we're far down the road for our field unit in terms of everything we've procured and assembled, and we're now at the phase where we're going to be starting to ship the field unit down as we move into Q3. Commitment to sustainability. This, in my opinion, is very critical. Again, one of the things that we don't do with Volt is we're not creating a new mine. We're not drilling new wells. We're using existing infrastructure. So our environmental footprint is very small. We don't have to build pipelines because the water is being moved and produced today. So when I look at what we're trying to do at Volt is use the system that's in place today, work with the oil and gas industry, and commit to doing the production as opposed to doing anything new like exploration. A little bit comparables. There's a lot of groups that are trying to get into lithium production. Everyone has a different strategy. The way I look at it is that we're a little bit unique in our strategy from the perspective that we're partnering with the oil and gas industry because they've got the infrastructure in place today. In terms of the board and the team, we've got, our board, we've got a number of disciplines from General Leslie, who's the former commander of the Canadian Army, to Maury Dumba, who's an oil and gas industry executive who's based out of Houston, to Marty Skase, who's my business partner, who we founded the company together, Warner and Kyle, who bring a lot of industry experience as well. John McEwen, who's our advisory board member, he's critical to the process. He's one of the key guys that have helped develop us the technology. He's a PhD in chemistry and a 35-year guy. So we believe we've got the right team, we've got the right board in place to execute and transition ourselves as we move into commercial operations into next year. So I guess just to sum it up, the key things from Volt's perspective, we've got our proven and proprietary capability. We've been extracting lithium for a couple of years now. Our focus is now really on moving to the field, showing that our system works, and continuing to drive down costs from an operating perspective. The field unit, we're looking forward to getting into operations as we move into Q3 of 2024. And the other thing that we're looking forward to and our partners are very excited about is our costs. Today, we're at about $2,900 a ton for our lithium extraction. That's based on where we're at in the Delaware Basin, and we're going to continue to improve on it. So again, the focus for Volt is get into operations, get to cash flow, demonstrate that we can produce lithium in the field so that we can start supplying it to car companies, to OEMs, so that we can start to look at not only going into production, but make sure that we've got someone that we can sell it to, and we're well down the path on both. So Dan, that's just a high level on Volt and what we're trying to do, and look forward to having questions or a discussion about it.
Okay, that's good, man. Hey, let me make a couple comments first. First of all, everybody talks about EVs. I personally believe that all these projections that we're all going to be driving EVs by 2030 are grossly overblown, mainly because I don't believe there's enough copper in the world to really do it. But I'm extremely bullish on rechargeable batteries. You must keep in mind that the power grid in a lot of countries isn't very good. So if you can really get rechargeable batteries available to people so they can, run machinery or run, a refrigerator or a unit, air conditioner unit or something off a rechargeable battery when the grid goes down, That's a huge market. So the market for rechargeable batteries is much bigger than EVs, and EVs are coming whether we like it or not. And I don't have any problem with EVs. I just don't think you can mandate them to people. But this concept that if we go into some kind of a trade war with China, like doubling the tariffs on Chinese cars, and they control the lithium market, well, guess what? We need lithium supply in the United States then, and that's what this does. Plus, I think Alex, pointed, we were discussing this before we got on. If you can go into the oil field and, disposal of salt water produced with oil wells is a very large expense for a lot of the upstream companies. They produce a lot more water than they do oil in some of these older fields because the water drives the oil production. If you can turn that from a cost center into a profit center, you've really got something. And then they'll start looking at it. So as soon as you make one of these things profitable for one, highly respected operator in the Permian Basin, you're going to get a lot of attention. I mean, it's just going to happen. So let's get into the questions here that have been posted. Let me move up my chat board here. Okay. George asks, is the DLE technology, can it be applied to oil brine deposits all over the world, or is it somehow specific to Alberta or to North American deposits?
It's for all over the world, and our DLE technology is for extracting of lithium from brine. We're focused on oil field brines because there's a ready supply. Mm-hmm. We can apply our technology to any brine. We've just decided to have a focus on North American oil and gas producers because of the amount of water that's being produced today. There's just, in my opinion, it doesn't make sense to create a new mine or create a new project when the water's there today.
Well, and you don't have to go, why go risk in some other countries where you don't have the stability? And we have the infrastructure already. We're already processing a lot of water. We have, regulations on how this water has to be processed and disposed of. So it all exists already. So I don't know why you'd really, at this point, why would you go into other countries or anything? But anyway, there's a lot of upside. And I know in Alberta, there's several oil fields up there that have high levels of lithium in their produced water. Then John asks, what happens if Trump is elected? He is not supportive of the electric vehicles and other renewables. I don't know that that's true. And where batteries are required, I just don't think he's supportive of mandating them or some of these, goals that are unachievable anyway. To me, that is a serious blow to lithium demand. Do you want to comment on that, Alex?
Yeah, my belief is, let's see what happens when we've got domestic production.
Right.
Like, my belief is Trump wants to support American industries, support American car companies, support American batteries being built. 80% of the lithium in the world is being refined in China. Let's turn the table around and let's start refining and producing in the U.S.
Yeah, I agree, 100%. Bill asks, how many different basins have you processed water from successfully?
Well, I'll in the U.S., we've successfully been extracting lithium from the Marcellus Basin. If you don't mind, I will just take us back to one slide here. Just gives a picture.
Yeah, the picture with
Well, when you look at this slide, we've been successfully extracting lithium up in the Basin, in the Marcellus, in the Haynesville, and the Permian. In Canada, we've done it in Rainbow Lake and the Montney, and also we've started in Saskatchewan. Our process works in, so far, every basin that we've had lithium in and we've been able to do extraction, we've successfully extracted the lithium from it.
Yeah. Are there have you tested anywhere that has contaminants in it that you can't get out?
To date, no, but we're focused on oil field industry. So another brine that you could look at is geothermal brine, like the Salton Sea down in California. Now that has the amount of contaminants in that are significant. And what we look at is parts per million in terms of what are the total dissolved solids in it. And they're significantly higher than what we see in the oil fields. Dan, when I look at our opportunity in front of us, we've got enough to do with the oil industry. This is a high growth, big business just working with the oil and gas industry alone.
Yeah, I look in here at the map. You show the Smackover. That's that green area. You label it the Haynesville, but the Haynesville is really over in western Louisiana. But up in Arkansas, the Smackover runs through southern Arkansas, and I know Standard Lithium is teamed up with Koch Industries over there, and they're moving forward with something at an existing site. So I don't know how far they're along. But anyway, I know the Smackover has a lot of lithium in it too. So.
And Dan, it sure does. Again, when I look at the opportunity, though, you're drilling wells in the Smackover, whereas in the Permian and other basins, you're taking water from existing production, and that's the key for our strategy.
That's the key. And for those of you on the line, these green areas shown on there are massive. The Permian Basin is 19 million acres. I mean, it's just massive with hundreds of thousands of wells. So anyway, let's see. Had other questions. So Bill also says, more finely grained, from how many different operators have you received produced water to test your process?
Well, we're under NDA with a number of groups right now.
Okay.
We've formally announced our first strategic investment that's going to be dedicated going to the Permian Basin. There's a lot of interest and there's a lot of discussion going on. And it goes back to your point, Dan, about costs. And if we can partner with the oil and gas industry, we're going to drive down their operating costs. I mean, this is a money-making venture opportunity for both groups. So it's incumbent upon the oil and gas industry to look at this for the simple point of being able to drive down their operating costs in their business too.
I agree 100%. And so you've got this 1.5 million, that's going to pay for this pilot plant. If you go to commercial, so that somebody says, okay, we're all in, we're going to go for this $20 million. Who funds that 20 million? Is that going to be you, or is that going to be the oil and gas company?
My plan and my structure is I want to be partners with the oil and gas industry. So what that means being 50-50 with them.
Okay.
Groups that I'm talking about, when they're stepping forward, I've had a strategic investment to start. Upon success, I would expect there'd be more strategic investment, and then we'd look to what's the best way to structure this opportunity. So if you're looking at a plant that costs 20 million all in, it's 10 million for each side. So how do you finance it? Well, we're talking with the OEMs and car companies about offtakes.
Right.
We're talking in initial discussions with the Department of Energy. There is significant motivation from OEMs and also Department of Energy to make this work. This is a solution for the lithium industry that's here today. Like we can go into production because we don't need years to get an environmental permit. We can do this once we start to scale up. So the OEMs, the Department of Energy, they see a clear runway to production. We're going to, as we move into operations in the third quarter, we're going to be providing them technical specs of the product that we're providing so that we can get into those types of offtake agreements down the road. Is there competition to work with this? You bet there is, because this is a solution that solves the American lithium problem today.
Yeah. And just a reminder, guys, $20 million, you know, the oil and gas business is an extremely capital intensive business. If you prove to, you know, the big operators in the Permian Basin that this is cost effective and that they can turn, you know, a cost center into a profit center, they'll pay that money. I mean, these horizontal wells they're drilling out in the Permian cost $8 to $10 million a piece. And disposing of their water is a very expensive process. So have you failed on any samples? I think you've already answered that question. I think you have. You haven't failed on any of the samples you've tested, have you?
Well, I mean, it's a process you go through. Have we failed on samples? Sure. Back in early 2022, we did.
Okay.
But over the past year, in terms of what we're doing, I don't want to make this sound trivia about the lithium extraction component. I mean, it's incredibly important. It's relevant. It's just we went through that technical hurdle back in late 2022. This is about being able to apply our technology across different basins and show the operators we can make money.
Yeah. How many barrels of water like that? So you're talking to 4 or 5 different operators out in Permian right now?
Let's just say there's a lot of interest in what we're doing.
Okay.
There's been a lot of interest in what we're doing since 2023. We've been under NDA with a number of groups for close to a year. We've had one group that stepped forward, and so what I can say is that there's significant help. There's a lot of work that's being done, not with only ourselves, but the groups we're working with. In Texas, it's a little bit of a unique situation for getting into production, and I'll explain why. In places like the Marcellus and the Haynesville, you've got a lot of fee title land where you've got to pay royalties to the mineral owners or the surface owners. In Texas, once the water has gone from the operator, the producer, to the next person, which is ultimately us right now and our partner, you get a transfer of custody. So you don't have the issues in terms of royalty issues that you might have with others. And that's a big deal because the water is there for our use today.
Okay, so then that's not considered a mineral extracted from the mineral owner.
No, and the challenge you've got in the Permian in particular, and I think this is one of the reasons why they've put legislation in place about this transfer of custody.
Okay.
There's just so much water being produced. It is such an important industry. I mean, that Permian Basin and that subset, the Delaware Basin, is so important strategically to the U.S. There's a lot of oil being produced there. There's a lot of water that comes with it. And so, if you look at, say, the economics of I say it's a $6.2 billion opportunity for lithium. Well, in the Permian, the cash flow from the oil side is about $94 billion a year. And so it's in comparison, it drops their operating costs, but it's not their core business. We partner with them, and then we operate and we help reduce their costs, and we drive lithium production in the U.S.
Yeah. For those of you on the call, I can't stress enough the importance of the Permian Basin to the United States. If it wasn't for the Permian Basin, for one thing, it's responsible for most of the world's oil production growth over the last 5 years. Literally, since we used to be getting a lot of growth in the Gulf of Mexico, but that's kind of gone down. But now the Permian Basin is by far the #1 growth story for oil production around the world. And you take that, and then you take the Marcellus Utica, which is the Appalachian Basin on that map, up there in Pennsylvania and Ohio, West Virginia. That's the most important natural gas field in the world because of where it's located next to our manufacturing. It's that area is why we have the lowest electricity cost around the world because of our abundance of natural gas. So these areas that are highlighted there in green are extremely important to the United States economy. I cannot stress that enough. So anything you can do to reduce their cost and help them make a little bit more money off lithium, that's going to be a big plus. Go to that slide where you're showing the numbers where you get the 100,000 barrels of water or whatever at the top.
Sure.
Yeah, that one. Okay, those are just examples, right? What would be right sized at Rainbow Lake, you think?
Yeah, that the characteristics of Rainbow Lake are very similar to what you've got in the Permian.
Okay.
From a lithium concentration. And what we look at is we look at what's called total dissolved solids in the water. Okay. And so that's everything. That's your chlorides, that's your sodium, that's everything that makes up the water itself. And so the Rainbow Lake water, we look at total dissolved solids about 140 to 160,000 parts per million. The Permian is anywhere from 125 to 180. So very similar concentrations. I put up Rainbow Lake just because we publicly disclosed that. We haven't publicly disclosed in what we're doing in the Permian from a cost perspective, but it's a very good analogy of what we're doing.
Okay, how soon do you think you're going to select the operator, and when we'll really know more details about the Delaware Basin?
Well, we're going to be in field production as we move into Q3. Okay. We're going to demonstrate that our system works. We're going to provide specs to the OEMs in terms of technical grade battery metal that we're producing on site. And I can't understate that enough. That we are going to be producing crystal in the field. We're going to be producing carbonates and hydroxides because we want to be able to give technical specs to the OEMs so that we can set up this eventual offtakes. we need to run it to show that it works. I mean, the benefit of having our field simulation center, Dan, is that we're running at water today. We're testing the system today. We're just going to put it out in the field and show that it works in the field. So as we move to the back, as we move to the back half of the year, I expect that we'll continue to see more investment, and we'll get into more disclosure of what this partnership looks like.
Yeah. Okay, Alex, he's got a question. How is this different from the mining approach? Well, it's a lot cheaper. For one, I think we've already kind of explained this because of the existing infrastructure in place.
Yeah, and it's a big deal because let's say we were supposed to start from scratch. For us to get started, you're drilling wells, you're building pipelines, you're building plants, and it's a bit of an iterative discussion because you need to have a large enough plant to justify the well capital cost for drilling the well. So you keep going up, up, and up. And a lot of groups say, well, you need to start at 20,000 tons per annum because that's the inflection point of where it makes sense. Well, you're $1 billion into your project then. We're using existing infrastructure. We're using water that's being produced today. So we don't have to have that iterative discussion. This is about making money. And the analogy that I would use for all the oil and gas people, it's like starting off with a single well battery. You drill your first couple of wells, you do your production. As you grow, you put more capital in, but you don't take all the risk up front. And what happens in addition to that is once you've got one system up and running, well, you've got cash flow from that. So you don't need to drive to the equity markets every time you need cash because you're already a cash flowing entity. That to me is just very important.
All right. Well, other than oil field brine, I mean, where's lithium coming from now? These mines or these evaporation fields down in Chile, and is there hard rock mining for lithium?
There sure is, and it's
very expensive, right? It's super expensive to build those mines. Yeah.
Well, and the thing is, when you look at say a sailor pond in Chile, from the oil and gas industry, one thing we know, I mean, it's not ideal, but if you have an oil spill, it's carbon. It actually greens things up. If you have a saltwater spill, nothing grows there for 30 years. So when they're drilling these sailor ponds in Chile, like you're not going to have anything growing up there. Now, it might be a desert. That's fine, but there's still things that grow in the desert. So this is a much more environmentally responsible way to get to the lithium production.
Yeah. Okay, Brian wants to see that slide with the other competitors on there. Go to that one.
Sure.
Because I got a couple comments on that too. Okay. The only one, let's see, I think Lithium Bank has done a webinar for us, and they've got some royalty deals that they're working on. Lithium Bank does not develop mines themselves, right? They just find one and then turn it over to somebody else.
Yeah, I mean, they're
a different business strategy, right?
It is a different business. I mean, we try and put some analogies to what we are, just because these other groups are dealing with lithium extraction from brine. We're just unique because we're focused entirely on the oil and gas industry. So we're not here to spend $1 billion to get our project off the ground. We're here to get into cash flow.
Yeah. And then the only other one I know anything about is Standard Lithium, and they've got that project over in Arkansas they've partnered up with Koch Industries, a private company. So anyway.
And I applaud them on what they're doing. And I look forward to seeing what they can do from a results perspective. Again, I'll drive it a little bit back to what we're trying to do. Once we get going in the field, the growth platform for us based on production that's being done today is the price in the US for oil fields is 350,000 tons per annum. No one, you couldn't spend that much money to develop the infrastructure yourself. So we're taking advantage of what the oil and gas industry's done. They've got their price, they've got their hydrocarbons, and as you mentioned, it's strategic to the US and strategic to the world. We're complementary in terms of what we're about to do, and that's how I see us fitting in with the industry.
Yeah. And it really, if all these things end up being successful, so what? I mean, the market's gigantic. It's not like, competition is not all that bad. We just need to get the DLE process going. Anyway, let's see.
I want them all to succeed. Yeah, I want everybody to succeed.
It's everybody will be successful. That's fine.
We can just get there real fast. That's what's
that's the key. Yeah. if you start getting well-known operators, if you get EOG, Oxy, Chevron or somebody teaming up with you and they believe in this, Exxon's in some of these projects too, I think. For one thing, they'll get a bunch of brownie points on the ESG scorecard if they do this too. So there's a comment here. Tesla sources 40% of its lithium from China. It would seem that Volt's Permian Basin presence would be a huge logistic advantage to supply Tesla's lithium factory in Texas. Please comment.
Well, that's right on the money of what our strategy is.
Okay.
Absolutely. And it's not only Tesla, there's others. And there's also, industries that are in addition to the car companies for rechargeable batteries. I mean, this is it's a big playing field we're dealing with right now.
Yeah. The rechargeable battery industry opportunity is gigantic. I truly believe that. First of all, just think if we had rechargeable batteries up in our attic that we could, recharge off the grid at night or something and run off in day. I believe that's a big market if we can ever tap into that. Okay, Alex asked a really good question. Is there an opportunity to process water so it can be used for irrigation?
Well, I mean, ultimately what we're doing through our process is we're cleaning up the water. So what we do in our process, and this is getting a little bit into some more minutia, but what we do is in our process, we take the contaminants out at the front end. So that's the organics. Now, there are two major reagents that you use in any lithium extraction process. You use caustic soda or NaOH for managing your pH, your water, and you use hydrochloric acid to create your lithium chloride that ultimately goes to your crystallized product. Well, we can take those two elements, so the sodium and the chlorides are abundant in our brine. We take those out and we use them in our process. So, and then what we end up with is cleaner water. Ultimately, what can you do with this water? There's potential multiple uses. For the frack industry, absolutely, that's a use for the water. Mm-hmm. Potentially down the road for desal, you bet, because we're cleaning up the water quite a bit. So, people think about desal and they think, okay, well, that's for drinking water. Well, I'll give an analogy. The Permian Basin, I'm just going to go into gallons. So the Permian Basin produces 681 million gallons of water a day. The manufacturing industry in Texas alone consumes 900 million gallons of water a day. Power uses 500 million gallons a day of water. So if there's down the road, we can use this water for other uses, I think there's going to be a lot of interest in the Southwest U.S.
Yeah, it's probably going to be, to use it for irrigation, you're really going to get it clean. I've always heard that the hardest thing is getting enough salt out of it. That would be, anyway.
Yeah,
I don't know.
No, and Dan, that's bang on in what we see too. And again, we take that sodium, we use it in our process. So it's a key element for us, and it happens to ultimately clean up the water too.
Okay, that's great. What's the magnitude of the income derived from treating water for the partner expressed as a percentage of total op costs? That's probably going to be unique to each situation. I don't know.
Yeah, like today, okay, we have to be focused. And so what our focus in today is lithium extraction. And so a component of that is treating the water. But the question for treating the water today is an upfront cost. It's not a huge part of the process. I mean, ultimately, if you go to something like desal, which is beyond the scope of what we're doing today, I mean, that'll be outside of the 2,900 a ton that we're using. But the 2,900 a ton for operating costs is something that we've battle tested up in Canada in the Rainbow Lake area. We've been battle testing it with different brines across North America. We're comfortable in that number. And that puts us in as a low cost provider to do lithium treatment.
So what lithium's selling for, what, 14,000 a ton now?
In China on the spot price.
Okay.
So Biden just put in 100% tariffs.
Yeah.
So is it 14,000? I don't think so. Is it 30,000? I don't think so. I think one of the key things that I'm experiencing is what the OEMs want is they want certainty of supply, and they want longer term contracts, and they'll pay for that. And so we'll see what the pricing that we get with it. I don't think it'll be 14,000.
So you're comparing $2,900 to $14,000 op cost. So you got a big profit margin.
Yep.
If this works. So okay, great. Do you have any thoughts on the lithium pricing going forward, like over the next 3 to 5 years?
I think what's going to happen is everything's going to be contract driven. And I have to look at it. I can't speak about the spot market because we'll probably be, most likely we'll be in contract. What's my expectation? I think if you're in that 20 to 25,000 a ton and you can provide that supply certainty, I think that's a good win for both sides.
Yeah. And I'll just say on a lot of pricing of chemicals and stuff, it's not like the oil and gas industry where you got this futures market where it's just, up and down $1.50 every day. I think, like you said, a lot of these projects are going to be tied to supply contracts, correct?
Correct.
So you'll have a fixed price for extended periods of time because you got to make that capital investment to build the plant and everything. So anyway, it's just a different kind of a market. So,
and Dan, when I look at it, what will ultimately get compared, we're not going to supply all the lithium for the U.S.
Right.
So pricing, in my experience, is priced off the higher cost producer because they've got to be able to justify their cap cost. The fact that we can do it cheaper and for lower cost, I mean, we'll be part of the supply, but not all of the supply. So the fact that we've found a way to do it less expensively, good for us and good for the oil industry, I guess.
Yeah. Let's see, John asked, in terms of lithium producers, do you see your technology as a threat to a potential competition, given that you may have pricing power if you have key cost efficiencies? No, you want to be the low cost producer. You want to comment on that?
I think let's get ourselves into production.
Yeah,
let's get ourselves some contracts and let's deliver lithium and make money for everybody and provide that certainty of supply for the OEMs.
Do you have any kind of protection on your technology, on your process? Is it patented or anything?
Well, what we're doing is we're patent pending. We're ready to go. The one challenge that you have with patents, and I'll use 2 letters, AI. Okay. And so once you file your patents and they go off confidential, you can reverse engineer. So we have to be just really careful with our strategy and how we're doing it. I mean, I know I'm maybe frustrating to the shareholders at times because I've been a little bit quiet about what we're doing. Well, I'm being quiet because I'm respecting our partner and I'm respecting the opportunity. If I go out there and start blowing all kinds of smoke, first of all, you're going to create a lot of attention. But second of all, you're going to get a lot of people looking into it real close. I'm more focused on deriving results and showing what we can do and let the results really do our talking for us.
Yeah, and you don't want to go, say that you're going to, team up with a certain company if you don't have that for sure, because that could kind of backfire on you. So anyway, let's see. Do you know what the CapEx requirements are for your competitors? And some of the like Standard Lithium over there, and I mean, it's just they're different. They're at already a chemical processing plant that they're just taking the water out of, I think. Anyway, go ahead.
In addition to that, though, they did announce a partnership earlier in the spring this year, and they're going to be drilling wells, and they're going to be driving pipelines to deliver the water to the processing plant. I mean, it's just a completely different capital structure because they have to invest in the infrastructure and the wells to get themselves started, whereas we don't.
Okay. When you select a partner and you know which field, are you going to provide further specs on the field unit processing capability? Then are you going to be like that thing you showed up for Rainbow Lake? You'll be able to create kind of a financial forecast off of that, right?
Yeah. Yes. And so the strategy all along is partner with the oil and gas industry.
Yeah.
As you mentioned, I mean, no one has really done this in the field. We're going into the field. We're going to go into operations. And then as we prove success, we're going to continue to expand and disclose everything that we're doing. But we're doing this the right way. We're letting our results do the talking, and we're going to demonstrate when we formally get into a partnership, we have to disclose all that. That's material information. So Both sides are extremely excited about getting into the field and starting operations up.
Yeah. So once you prove this up and you get a partnership agreement in place and everything's ready to go, how long do you think it would take to build a commercial facility?
My expectation, if we do an announcement in the fall of this year, our plan would be in the first half of 2025 to have a commercial plant up and running.
Great. Yeah, that's quick. That'd be good.
And I guess,
Dave,
and just one comment on that, Dan. So the Permian, as you know, as we've talked about, produces a lot of water today. So the field unit that we are putting into operation, I mean, if you put that into the Marcellus as an example, where you've got higher concentrations, well, that's cash flow positive right away. And so what we're doing is we're developing a field unit for operations. The Permian's just a little bit unique just because of the size of the prize and the amount of water that's being produced. And so this is a field unit that's going to be in operation.
Okay. So this field unit will have sales of lithium, right?
Correct.
Okay, just right up. Okay. David asks, is the water produced naturally occurring? Yeah, the water that's coming up is just in the formations. It's 8 or 10,000 feet below. It's just in the formation. So in all oil and gas wells, you have oil, gas, and water. The Permian Basin produces multiple things, but it produces a lot of water. But that's water that was buried under the ground maybe 1 million years ago when these formations were formed. So it's just natural water. It's seawater, really, that was just captured underground, correct?
That's absolutely correct. That's what it is.
Yeah, that's all it is. Seawater that was trapped in these formations, just like when the sediment and everything that produced oil and gas was too. So I don't know. Some of these, I'm sure, guesswork. How many barrels of water do you project handling in 2 years? Who knows, right?
Yeah, I mean, I think that the most important I mean, what's highly relevant is our partner, other operators in the Delaware Basin and the Permian are watching close. I mean, the opportunity is how fast can you build them, and what's the capital requirements along those lines. And it's really important from my perspective to make sure we do this in a measured approach, so that we've got cash flow, we've got offtakes, we've got other support, so that we do this in a manner that we just don't blow up our shareholder base.
Yeah, I think you've answered some of these questions. What's a timetable to build a field operations system? Well, the pilot's already going, right?
Correct.
It's already it's going. It's doing it.
We're delivering the field unit in Q3 and we'll be operating in Q3. So we announced we closed our investment with our strategic partner on May 2nd, and we're going to be in the field in Q3.
Okay. In the Permian Basin, who pays for the ultimate water disposal? The operator. I'll answer that question. It's the oil and gas operator. His problem is to get rid of the water. So he's in charge of the field. So this would be like a separate business that they'd enter into to process the water later. It would not be Volt's responsibility to dispose of the water. May you explain more so we can understand how much you are saving by using brine from oil? I think you've talked about that, field competitions that have to drill their own wells to get brine. Well, it's expensive to drill wells. So if you already got it and you don't have to drill new wells, you save a ton of money. But you want to comment on that?
Well, I mean, other groups have looked at, building 20,000 ton per annum plants. And I mean, you've got to move a lot of water to build a plant that does 20,000 tons per annum. I mean, I will just go to, I'll just go back to this slide here. Okay. Just to give everyone a little bit of perspective. So in this slide, okay, now this concentration is a little bit lower, but to get to that 20,000 tons in this scenario, you've got to be moving 2 million barrels of water a day. Well, that's a lot of wells you're drilling. And so your CapEx, your upfront CapEx is significant if you're trying to do this on your own.
Yeah. And the point is that we already produce a whole bunch of water. There's no reason to go drill water wells. That are going to be expensive. I mean, you could be going into shallower formations to make them a little bit cheaper, but still, drilling and completing wells is not cheap. So, anyway.
Well, and I think that's the benefit of having the oil and gas background, working with the oil and gas industry. We understand how the industry works.
Yeah, they're going to take charge of this thing. I mean, they're going to be running the field operations. So, is this a multi-skid facility? How many acres of space does it require for the pilot, and how many acres does it take for a commercial plant, the $20 million plant?
Yeah, our field unit, we've spec'd it out. I think it's about 50 by 100 feet, 50 feet by 100 feet.
Yeah,
So that's
real small.
for a field unit. It's not that, it's not large. If you're in the Permian Basin, you see what they do with water and what they do with frac pits. I mean, a frac pit that, to drill a well, it takes almost 1 million gallons of water or barrels. It's a lot of water. They take a lot more space than what we're doing. We're setting up our system right beside the tank farms where they do their injection.
Yeah, just Google the Permian Basin, and you're just going to see there's a lot of surface location available. This is not a metropolitan area. It's a wide open area. So, how long would it take? I think we've answered that. It's 9 to 12 months. Please contract. Can you comment on what E3 is doing?
It's hard. I mean, what they're doing is they're trying to develop the Leduc Reservoir effectively. I applaud them for what they're trying to do up in Canada. They're going to develop the field on their own. I respect what they're doing. Our strategy is just a bit different because we're oil and gas guys working with the oil and gas industry.
Okay, I got a couple questions here before we stop that were emailed to me yesterday. What company is doing the lab analysis at the Nanotechnology Research Center in Canada? I asked this question because we have been following Nano One Materials Corp for several years.
Yeah, so up in the Nanotechnology Center, or the Research Center up in Canada, up in Edmonton, Alberta, we use the lab of the group who signed our technical service agreement, so Sterling Chemicals. That's where John McEwen's from. And we also use a third-party independent group called ALS. And ALS they do a lot of lab analysis for not only our brine, but water treatment systems. Like, they're one of the largest in the world. So we use that third-party accredited lab for all the work that we do.
Okay, so you don't have anything to do with Nano One Materials Corp?
No.
No. Okay, Nano One, what they do, they're based in Vancouver, and they're doing something to coat the lithium crystal. So it has nothing to do with this. They're further on down the line and make batteries charge faster and hold more energy or something. But anyway, I haven't looked at them in probably over a year. Are you familiar with ROC Resources, ROK Resources, two projects in Southeast Saskatchewan, which they call the Mansur, M-A-N-S-U-R, and Viewfield? We've been told that their tests of the brine show very high concentrations of lithium.
And they do. And I know them. I know the formations that they're going after. We call them Mansur stringers. That's what they're doing in their formation. We'll see what happens with them. I applaud anyone that's doing lithium extraction. I guess the difference between what I see in Canada and the Permian basins, there's just no other basin that produces the water that the Permian does. This is the big prize.
Yeah. I know they've got some company called Hub City that they own 50% of, that they're working with somebody up there on it, and they're supposed to come out with some detailed report on. I have nothing in my valuation for the company for their lithium business, but anyway. So I guess we'll leave it there. But Alex, this sounds great. You made a lot of progress, and the fact that you were able to raise that $1.5 million to get this pilot project going is a major step forward. So if you can get somebody big, some big operator out there to team up with you, that's going to be a major announcement. So, but you think you got a chance to make that announcement later this year, correct?
Well, that's what our plan is. Yeah. So I think the big thing from us that people will see is we'll get our unit in the field. We'll tell people we've got the unit in the field. We're going to start producing. We're going to start operating our system that's going to extract lithium from produced water, and we're going to be producing battery-grade metal. Those are the key deliverables that we've got to do for our partner, for ourselves, for our shareholders. And again, this isn't new for us. We've been producing products at our field simulation center. So we're well down the path. We want to check the box by going into the field now.
Okay, great. Let me just conclude. I know we have a lot of non-EPG members on the call today. If you want to learn more about the Energy Perspectives Group, we're a networking group for energy sector investors. I formed it in 2003, so I've been doing this for a long time. And we evaluate look at a lot of different energy companies. We're also looking at, copper companies, and there's a graphite company we've looked at that has something to do with the battery industry also. But primarily, we're looking at oil and gas companies upstream and midstream. My entire background, I've been 45 years in the upstream oil and gas industry, so that's what I focus on the most. But you can, if you're interested, send an email to Energy Prospectus. That's one word, energyprospectus@gmail.com. And Sabrina, who handles our member services, will send you a link telling you what we do and how you can join if you want to become one of our members. And it's the cost is $350 a year to become an EPG member. All right, Alex, hey, thanks a lot, man. And we'll be following this. And hey, if you want to get down here sometime, once you move this project along, I would recommend you come down and host a luncheon for us. And when you meet our guys face to face in Houston, we're starting to get 40 or 50 at our luncheons down in Houston. It's really picked up again, and we have a lot of interest in stuff like this.
Well, I appreciate it, Dan, and I'll commit to doing that when I come down. It's highly relevant for the state of Texas and everything that's going on, and for the industry. So look forward to meeting your team live or your group live.
All right. Hey, thanks a lot, man.